Okay, guys, welcome to this week's weekly update. This is from the 25th of September to yesterday, the 1st of October. We're going to be looking right across the whole market. Interesting news this week. The tide has turned. And I'll tell you about that in a minute. But 1 week doesn't make a trend, remember. And also, did you notice the economy grew in the last quarter by 0.2%? So we're not officially in a recession. Oh, the media maybe failed to report that. That doesn't go with the remit, does it? Anyway, apparently we're not officially in recession because the economy grew by 0.2% last quarter. So recession is 2 successive quarters of negative growth. So we're not officially in recession, as well as the Bank of England was actually saying. So I think it's a case that the Bank of England is forecasting we might go into recession. So I think might go into recession might be the easier phrase to use. Let's talk about the Fife property market in the last week and how this reflects on where things are going. And also we're going to be talking about some of the things about rental red flags, house price index, and then we're going to be talking about the wealth creation show, as well as what's coming onto the market, what's been sold in the week, and also keys handed over, what prices are actually going for in certain areas of Fife. Okay, let's kick off. And we'll look at the numbers for the week. Interestingly enough, I've got the monthly numbers here as well, so this will be quite good to actually look at overall. Look at the week. Wow, there is a complete undersupply as opposed to what's been sold. So demand has outstripped supply quite significantly. You can see in the Cooper area, 7 properties actually went on, 12 properties went sold. East Neuk 6 went on, 13 sold in that week. St Andrews 5 went on, 7 sold. Levenmouth 13 versus 13. Even Dunfermline 61 versus 69. Glenrothes 15 versus 8, but remember Glenrothes has always been a bit more buoyant, so it's a wee bit round the other way. And Kirkcaldy outstripping demand, outstripping supply again, 26 versus 32. Does this mean that the boom times are coming? Who knows? keep an eye out on my reports anyway for that reason. Let's look at the monthly numbers. This is the revelation. So this is the 4 weeks combined all together by what's actually happened in the month. And actually this shows the picture, the true picture of what's happened in the last month. Here we are here. You can see every single area, apart from Levenmouth, has actually under demand. See Glenrothes, how that's 98%. So even Stevens. So even though when you saw this in Glenrothes here, 15 versus 8 last week, so in other words, more properties came on, more properties sold. Every other week has actually been a lot more actually sold than there was actually come on. So it's all quite stable. It is a really stable market. You can see there as well, we'll jump back to the monthly one again, the weekly one again, 154, 133 actually came on. That's quite normal for the number of properties coming on in the Fife market, 133 to 140. 154 is quite excessive in terms of the numbers. And then the monthly ones, as I said, when you look at Cooper, 52 versus 45, East Neuk 28 versus 25. So all quite stable markets. St Andrews, 75% demand. That's not surprising. That's quite typical. Levenmouth again outstripping. That's basically because Levenmouth is a very, very affordable area. And you do have the train station also coming there as well. And a huge amount of investment, over £100 million going into the Levenmouth area over the next 2 or 3 years. Dunfermline, 74% demand. Dunfermline seems to always lag behind. I think it's to do with a lot of new builds getting built, and that isn't reflected in the sold figures here. So a lot of people probably selling up to move into new builds. Glenrothes 62 versus 61, even Stevens for Glenrothes. Glenrothes is a really good market as well. Interestingly enough, when I was sitting in the Housing Partnership Committee in the early 2000s to 2010, representing private landlords' interests on the Strategic Housing Partnership with Fife Council, it was actually identified that Glenrothes was one of the most highest pressured area for housing in the whole of Fife. And at that time, it was second outside of St Andrews. So it tells you that Glenrothes is a real boom area as well. I've got a true belief that Glenrothes has still got a lot of mileage to go, and Levenmouth as well to catch up. We're still looking at average prices. I'll talk about this average salaries to average prices in Fife and the multiplier, and how I believe that is that's where the figures are. And Fife has still got a lot to give in terms of prices or house prices and affordability. So overall, in the month of September, it's 679 actually came on and 571 sold. We're approaching round about 800 properties on the market for a sale over the whole of Fife. Remember, that's significantly more than there was 6 months ago, which is about 550. So there still is a huge oversupply of properties in the market, but not an oversupply in comparison to where we were before pre-pandemic times, which is about 1,000 to 1,200 properties on the market. So we've still got a lot to go. If you've got 800 properties on, you're selling 6,500 a year. I'll work that out for you in terms of numbers just now. Just get my wee calculator out, and I'll tell you the average weeks to sell is 800 divided by 6,500 equals that, multiplied by 52 equals just about 6.5 weeks. 6.5 to 7 weeks to sell on average. So we're not at the 4 weeks to sell. So if you do think your house is going to be flying off the shelf in the next few days after just being listed, be more realistic, please. If you get it, fantastic. If you don't, you need to be more realistic. And it genuinely is a wee bit more time to wait, over a month, about 6 weeks to 7 weeks to actually sell a house on average just now. So if your house is above average and it's keenly priced, then it'll probably go a lot quicker. If it's kind of below average, need a bit of work on it, there's a lot more for people to choose on potentially in your price point as well. That's a really good one to look up the websites and actually look in your area. For example, if you're in Leaven, look in Leaven, and if your house has been valued at 100,000, then look at every property from 80 to 120,000, and then you'll see what your property is like in comparison to these ones that are currently on and available for sale. And that'll give you a really good idea if there's going to be a lot of demand for your type of property. Don't be biased. I know it's your house and everybody thinks their house is the most wonderful house in the market, but you've got to look at it through the eyes of a buyer for the first time and what they see and how they see your house presented on the internet and on websites. That's a really important key here, how it's presented, because that is the first time anybody will see your property. It's when it actually goes on a video, when it goes on social media, when it goes in photographs, when it goes in the description. So how is it described? How is it presented? Is it nice and bright photographs? Is it welcoming? Does it look inviting? Does it look decluttered? All these different things make a fundamental difference to it if someone will inquire or not about your property. So it's important it's presented in the right way, and that's all down to getting the right estate agent with the right marketing and the right results, as well as the end result, which is the most important thing. It's not the fee, remember, it's the end result, because every estate agent can get a different result at the end with the exact same property and the exact same buyer. It's all down to how well they are at negotiating and how strong they are at negotiating. I'll be honest, if an estate agent comes into you and you say, can you do it for cheaper? And they go, yes, I can. What do you think they're going to do with your sale price when they actually go to negotiate with a buyer? That's probably exactly the same thing they're going to do with a buyer. So you've got to be wary of things like that. The most important thing you should be asking an estate agent is how much do you achieve for this type of property in this area over and above the home report at this point in time, or maybe over your numbers the whole of last year. We track that information all the time. And if you ask, that's comparing oranges with oranges, you see, because it's the case that you're asking that same question to every single estate agent based on last year's figures, January to December. How much did you achieve over the home report for this type of property, or your properties in this area? And you should be able to tell you that in terms of percentages, should be able to tell you in terms of monetary figure as well. Remember monetary, because you could have an agent that sells a property at 100,000, for example, and they sell all their properties for 100,000. They get 20,000 more, and they tell you it's 20% more. And you go, wow, 20% on 400,000. No. It only represents £20,000 extra. See how it's done? There's a thing in political circles, it's called lies, damn lies, and statistics. You can make anything sound as good as you want it to be. So make sure you find out it's in percentage, and make sure you find out what that is in monetary terms as well. Because if they're selling houses below your value of your house, then that percentage will be a lot less in monetary terms in terms of what your house is. And so that's two key indicators you should be asking an estate agent when you get them in the door about what their performance is. It's not the number of properties they sell in the area. That's not the most important thing. The most important thing is how much more than the home report will they get for your property at that price point in percentage and in monetary terms, pounds, shillings, and pence. Anyway, okay, let's talk about back to our figures. So back to the monthly figures here. Let's have a wee look in here. This is what's actually sold so far. Now, this for us last week. The reason I tell you about what's sold, as I said before, most people don't understand. So I keep telling everybody why I'm telling you this. This isn't to gloat or anything like that. This is to give you an idea of what that type of property is selling for at the price point it's selling for. And if it's a price point that it's attractive for your type of property because you've got a similar property to this one in the area, then, and if that's a good price point for you, then you probably need to get in touch with us, because we could probably get that figure for you as well, or above. I'll be honest, most properties are still going for over the home report value at this point in time in the area, but they're not as significant as they were last year in terms of the price points, because all the price points, remember, have caught up. So what's happening is, if it was maybe 100,000 last year and it was sold for 120,000, and you've got the exact same property, then your property is now worth 120,000. So you shouldn't expect another 20% over that, because that 20% was added on to last year's. So you'd be 120,000. So that's why you're probably just getting a wee bit more than what you are, because all the prices have flowed through now and all the evidence is through as well. So that's another key thing to remember, and be realistic about where you are. If you can't get your head around that, then please feel free to speak to me about it, or just give me a wee message. And then I'll catch up with you probably during the week or something like that. More than happy to explain this in a bit more detail so you understand. After all, it's the most important thing. The most important thing in your house sale, it's your biggest tax-free asset. The most important thing you should know is to get the facts about where you stand right now and what the valuation of your house is, and how likely is it to sell, and when it's likely to sell in terms of weeks and months, and who most likely is the market to be, and what do you think it possibly could achieve, because then that will then give you, I mean, we don't have a crystal ball, to be honest, but we can give you a good idea about what things are going for in your area. But the most important thing is then it allows you to make decisions based on facts rather than opinions for your future. It is your biggest tax-free asset. Why would you not get the facts before you make decisions? That's the key. A lot of people actually say, oh, well, I'll wait and I'll get you out later on when I'm ready to go. It's like, no. If you're doing any improvements and you're thinking about doing it right, over the next 2 or 3 months, get us out now. Get us out now so we can tell you what you should be doing and where you can add the most significant value. And that's, if you can add the most significant value in certain areas, you won't be spending. A classic example is I went out maybe a few months ago to someone in the East Nuke area, and they said, I've been advised I should really be changing the ensuite in the bedroom. And I walked into the ensuite straight away and I went, how much is it going to cost you? And they went, well, £6,000. And I went, you're joking. I says, if you change this ensuite, there's no way you're going to get £6,000 back out of it. I says, I'll be honest with you, you don't need to change it at all. All you need to do is strip all the silicone off, re-grate the tiles, and then clean up all the base, and then probably put a bit of a new bit of vinyl down, and that's it. It was sold in 1 day for a record price. They saved themselves £6,000 in the process, because they took the advice way before the start of the journey. Now, in the classic case that what we're getting now is people say, I'll wait till I'm ready. If that was the case and they had waited till they were ready, what would have happened is that they would have got me out when they're done ensuite and said, we just spent £6,000 on our ensuite. And I'm like, you're never going to get that back, because that's no cost effective. So the best advice is to get someone out at the earliest possible opportunity, so you can get the facts to make decisions to do what you need to do to the property. It might be the case you don't need to do anything to the property, but at least and then you can wait till the time's right till you need to do something. Anyway, hopefully that's actually helped you. Let's talk about the numbers again, and let's pop back to what we've got over the line this week. So over the line this week, and we'll talk about what's coming soon as well. Over the line this week, we have got, this is, and I'll just pop it in the bottom. This is Swallow Crescent, Buckhaven. This was a 3-bedroom mid-terraced house, and it was listed at offers over 110,000, and that property is now away. So the Bird scheme in Buckhaven, if you've got a 3-bedroom mid-terraced house, they are going for offers over 110,000 at this point. So that will give you a good indication about valuation of your property if you've got something similar. You can go on our website as well. You can still see all the information for this if you want to drill in and see all the details for this property. So you can pop on our website and have a look. The next one it was sold in the week was Main Street in Springfield. just outside Cooper. It was sold in 10 days, and it was a 4-bedroom end terraced house. And it was listed at offers worth 220,000. That is away as well. The next one was Skeith Road, finally over the line in Cellar Dyke, a 2-bedroom upper apartment, and this was on offers over 190,000, and it is gone. So 2-bedroom upper apartments in the Skeith Road area, in the Silver Dykes area, actually, Silver Dykes development in Cellar Dyke, they are selling for 190 to 200,000, possibly a wee bit more. So that'll give you a good indication about what 2-bedroom properties, 2-bedroom apartments are selling for in that area. Finally, the one for here, Jamie Anderson Place in St Andrews. It was sold in 10 days as well. A 2-bedroom semi-detached house. It had a dining kitchen. That wee box room at the front was actually right in here. That wee room there was actually opened up into the kitchen, and it made the kitchen a big, long galley style with a dining kitchen with a dining area on the end, and then it also had a conservatory off the back. This was over 240,000. This was sold, and 2 other people missed out on this property. So if you've got a property in the Jamie Anderson Place area or thereabouts, Roundhill Road, things like that, Kilrymont Place, all the way around there, if you've got one of these properties in that area, they are selling very, very well. Offers over 240,000. There is 2 other people that missed out on this one. So if you've got one, then get in touch with us. We'll have people waiting for these types of properties. Let's talk about coming soon. We'll get onto that. What's coming soon? Quickly, I'll just jump onto this one before I come back to coming soon. Watch out for that one. Rental red flags. So Richard and I did this yesterday. You've probably seen it this morning with the show ran as well. How to avoid problem tenancies and create the perfect letting in Fife. This was all about checklists and how to make sure you have a compatibility checklist. Also, how to insist on face-to-face viewings and the reason why. Now, remember, this is a 4-minute read on this article. But what Richard and I are doing, we're actually going through this for an hour on a podcast and also on a show, actually explaining to you with our personal experience and our wisdom about what we've done over the years. I mean, I've done this for 30 years, been in the property investment market as a landlord, as a letting agent, and an investor now. And Richard's been a letting agent for the last 12 years. So we've been given our personal insight into this and to help you. So if you're just starting out in your journey for buy-to-let or property investment, you're getting first-hand experience from people that are very, very experienced in this industry and have an excellent track record. I don't say so myself. The reason I say that is because we have been the #1 letting agent in Fife since 2009, every single year. About 12 years on the trot, we have been #1 estate agent in Fife, voted for by our customers, over a 98% approval rating for what we do as letting agents. So we'll talk about that and why you should be preparing detailed inventories, inspection reports. The inventory one's a really good one. I show classic examples of times where you, even though you prepare an inventory, you can actually get caught out and actually be just forced to hand the deposit back to the tenant, even though you've got damage to your property. So there's really good insights into there if you're a landlord. You could listen to the show on the podcast. It's on the link on this post. You could watch the show online if you want as well on YouTube. It's on the link on the post again. Or you could just read the article for more insight into what's going on. Read the article. If you think it's interesting, you want a personal insight into it, please feel free to do that. What's going to be coming soon? Let me talk about what's coming soon. Just quickly jump into Dunedin Park in Balmullo, a 2-bedroom semi-detached bungalow. Yep. We'll just talk about hen's teeth as soon as we mention bungalows. I'll take a wee drink here. So, bungalows, few and far between. Don't get built very often now because they're very, very expensive to build in comparison to what the builders can make out a profit of basically a house or a semi-detached house or a terraced house. So the 2-bedroom semi-detached bungalow in Dunedin Park in Balmullo is coming on. Dundonald Park in Cardenden, 3-bedroom semi-detached house. Kelsey House Achtermuchte, a 2-bedroom upper apartment. Church Street in Buckhaven, a 6-bedroom detached house. Bankino Avenue in Tayport, a 3-bedroom semi-detached house is coming on. Main Street in West Waynes, a 1-bedroom bungalow, another bungalow coming on. Cribs, Anstruther, that's a 4-bedroom semi-detached house is coming on as well. If there's any of these properties that actually appeal to you at this point in time, message us direct. You can register your interest. When we get more details, because we're bringing it on, it's all signed up. That's why I'm talking about it right now. So when it comes to the pre-portal, we might give you advance notice. We usually will. We'll give you advance notice when the pre-portal is getting done. So you'll be in a position to do something about it when it actually goes live. We are possibly getting into a boom situation again. You can see the numbers there. The demand is outstripping supply this week, and it could be like that the next week as well, as people begin to realize that, you know, utility bills are not going to be as much as they think. Possibly base rates are maybe not going to move up as high as they think as well, because inflation is going to be under control a wee bit more. Don't know about the mini budget and how that's affected things. We did talk about that during the week in our show, Richard and I, and in terms of how that will affect the economy. They might have to increase base rates in order to support the pound, but the pound is up at $1.1 and 1.1 euro in the exchange rate. Now, it was 1.1 euro 6 months ago, so we didn't increase base rates at that time. So the euro's under control. The dollar, hopefully it will recover this week, which might actually mean that we'll be okay and base rates won't need to rise for that reason, and inflation will be under control for that reason. The reason inflation goes up is because we start, if the dollar is weaker against if the pound's weaker against the dollar, it's dearer for us to buy in goods and services for assembling in this country. Therefore, it makes our products dear in this country. Therefore, it makes our prices go up. Therefore, it causes inflationary pressure. That's the reason why. That's why you want to have a good, strong currency. Not too strong, because it makes your exports then dearer to everyone else. So there's a fine balancing act there. Okay, next one I'm going to talk about ZOOPLA house prices. I'm going to talk about what's over the line as well in a minute and give you an idea of what price points are going for. I actually did a ZOOPLA UK house price index report this week. It's on the post, the blog, the show, the podcast, and the information as well. Interestingly enough, we are still sitting at the UK average house price is £292,118. The average salary to UK house price is 9.4 times the average salary. Now, let's compare that against in Scotland, where the average price of a house in Scotland is 192,966. So the average salary in Scotland compared to the average house price is 6.22. See, that's how that's more affordable. 6.22 versus 9.42 in the whole of the UK. I mean, London itself is 525,000 as an average house price. Scotland's 192,966. It's less than half. So Scotland's far more affordable. But what about Fife? Fife's £168,599. That's the average price, which is a 5.43 multiplier. Now, at the credit crunch, the average multiplier, in other words, salary to house price, was about 9. And Fife's still at 5.43, and Scotland's still at 6.22. So what does it tell you about the mileage and how much more house prices can go up in Scotland, and especially Fife as well, and still be quite tolerant in terms of the rest of the UK, because they're 9.42 on average, and I would imagine England will be a lot higher, because you're stripping out. If you strip out Scotland and you as well, because Scotland's less than that, then England would be a lot higher. So therefore, the multiplier in England is really probably about 10 or 11, which makes England completely unaffordable. Which is why the UK government has actually taken the decision to put the exemption up for stamp duty. Up significantly for first-time buyers, and also for resellers as well, and buyers, rebuyers. And the reason for that is to stimulate the housing market. We don't necessarily need that in Scotland at this point in time, because it's still affordable to buy in Scotland in terms of the multiplier. I mean, obviously, you're not expected to buy the average house straight away on your first-time buy, but you're expected to upgrade from another house that you bought in the beginning, which exponentially moves up at the same time proportionally in comparison to the price point to the house that you want to move up to next. So you're just on the ladder and you're just upgrading every time, but you're upgrading proportionally because the house price has moved up that you're moving from to the same proportion to the one that you're moving up to. So it keeps it on a like-for-like basis. I hope that makes sense. If it doesn't, please feel free to contact me. So that's on there as well, talking about the housing market and talking about how demand has dropped, but it's not less than the 5-year average. And sales, the number of sales agreed has dropped in comparison to the previous quarters, but it's not less than the 5-year average. The flow of new supply has dropped, but it's not less It's a wee bit more than what the 5-year average is, but it's only 4% more. And the number of stock for homes for sale than the 5-year average is still 21% less than the 5-year average. And that's what I'm saying to you about. We've got 800 properties right across Fife for sale, but it's less than the 5-year average. Significantly less, which was about 1,200. In the credit crunch, it was 2,900. So long way to go. I don't think there's too much to worry about. But the key message out of this is you'll have to wait probably a lot longer to sell your house than you did before, because there's more properties in the market, plus the fact there's a wee bit less demand because people are genuinely concerned. Certain groups of people are genuinely concerned about that. So if you want to watch the update in the ZOOPLA, it's on the link as well. You can watch it or listen to the podcast. Completed and over the line. Just talk about a couple of these ones here. Carlton Crescent actually completed last week. This is where I can tell you what it went for in terms of price point. A 3-bedroom, semi-detached house in Glenrothes actually sold in 2 weeks, and it sold for 4% over the home report value, and it sold for £165,000 at Carlton Crescent in Glenrothes. So it shows you how much it's going for, but it also shows you how much over the home report people are now beginning to pay, and people are now beginning to accept. And this goes back to my saying about last year 20% over, but the new price that you've got in your existing property when you put it on now represents the increase of the 20%. So you're obviously getting a wee bit more, but you're not getting the 20% you got before. Again, hopefully that makes sense. Randolph Street in Buckhaven, 2-bedroom upper apartment. 2-bedroom upper apartment, Randolph Street in Buckhaven, sold for £60,000. Now that was a good price point for these types of properties, and that was in the previous. I think the premises used to be. It was either the Co-op or the Wonder Store before. Maybe somebody can actually pick me up on that. I'm sure it was the Co-op before that building, and then it was converted into a number of flats and apartments at that time. And one of these I've actually just sold recently for £60,000. So that's a good sale for there. Another 2 or 3 here as well. Shuttlefield and Newborough, 4-bed mid-terrace house. That is sold for 3% over the home report for £215,000. Again, you can see the prices they're going for. Caribbean Crescent in Glenrothes, 4-bedroom detached house. It sold in 4 weeks actually at that time for 4% over the home report value at £259,000. One other person missed out on that property actually. And Dunnacallan, Williamson Place in Toll Road in Cellardyke, 3-bedroom semi-detached house, sold for 4% over the home report value, £285,500. Claybraes in St Andrews, that actually sold for £420,000. That was actually the home report price. So it shows you it's reflective of the current market as it is now. So a 4-bed detached house, and it sold for £420,000. One other person missed out on that. So that gives you a real good indication about what properties are going for at this point in time. And hopefully that will help you make decisions. Because if you've got a house in the market now and you're thinking, oh, I'm going to get an astronomical amount over, well, you just heard these numbers. That's kind of where they're going for the now. So you've got to think about and be realistic about where you are in terms of what you're thinking. Okay, the last thing I want to talk about is tomorrow. Richard and I are going to be on the Wealth Creation Show. We are going to be talking about the 7 different types of income streams. The article is already written and our script is all written down. Took a wee while to put that all together. But we're actually going to be talking about 7 different types of income streams. They are active and passive income streams, income streams, diversification, earned income, profit income, interest income, dividend income, and rental income, and capital gains income as well. We're going to be giving our own personal insights into them. Remember, this is all about my experience that I've gained over the last 30 years investing and creating huge amounts of wealth over the last 30 years. And all I'm doing is using that information, putting it in here, we're putting it into a show and giving you all that information for free. There's an upsell clearly here. Hopefully you'll come to us, you'll get us to invest, and you'll maybe invest in property. You'll maybe use us to let the property. And that's all it really is. Plus, I'm building a bank of information for my children and my grandchildren and stuff like that in years to come. Because the content I'm providing just now is timeless content, so it'll be just as useful in 20 or 30 or 40 or 50 or 100 years time, because it's all timeless content I'm doing about how to do that, about how to generate all these different types of income streams. So Tune in tomorrow, Wealth Creation Show, 12:30. It will be going live. If you've got any questions you want to ask, please feel free to do that. Thank you, Nick, just for your comments. Great insight as always. The media are typically exaggerating doom and gloom on the economy and are now doing the same with housing. We all need to remember Fife's a great place for a home or a holiday, and that will not change in the medium to long term. Absolutely. Thank you very much for your comments. I appreciate that. My instant valuation tool is on here as well. Take the opportunity to plug into that. It is there for your benefit. It gives you an instant valuation on your property. Sometimes it's an exact science because you've got the exact same property as maybe one down the street that's sold, and they've got the information for it, and the algorithm works it out and knows exactly what the price of your property should be on a home report anyway. And then sometimes it might not be as that accurate, but it's easy enough for us to then follow up with you and then give you a real good idea about what it is based on the information you can tell us. That's really in a nutshell. Now, it will give an instant valuation for a sales figure, and it will also give you an instant valuation for a rental figure as well. So if you're a landlord, an investor, or a tenant, and you want to know what the price is for the rent for your property or your type of property, or a property you could be buying, or a property you're in just now as a tenant, then click on the link, put the address in, and you'll get an information there, and it'll tell you the price points. It's got 3 different price points on it: top, middle, and bottom. Top's mint condition, move in, nothing to do. Middle's move in, maybe change the kitchen, bathroom, decorate throughout the years. The bottom one is clearly kitchen, bathroom, and decoration, carpets need done now. That's it. That's it, guys. Hopefully, I give you a real good insight into the Fife property market and overall in general in terms of the economy, because I covered that a wee bit more as well. And until next time, and until the Wealth Creation Show tomorrow at 12:30, bye-bye from me.